Hey traders, today we're going to continue on talking about the psychological aspects of trading and how are you able to master and get into that top mental state when you're trading. And today we're going to talk about a concept which is called revenge trading. And here's a clip for you to see what this is all about. All right, found this great opportunity in Apple. So I'm gonna put in order $500 to buy, and if it doesn't go higher, $495 I'm gonna exit, and I'm gonna take a profit at $520. So I'm gonna make $20, risk $5. Let's put this trade on. Okay, let's see work. Oh man, just got stopped out. Stock can't go any higher. Wait. Okay, so it's down $100 now. You know what? Get this plan. I'm gonna trade my own. Make that back, that $100. And it's not gonna go lower and buy at $490. Okay. That's $480. I'm down $200. So you can see in this video, revenge trading is something that traders need to be very, very aware of. It's a situation where you lost money on a particular trade and you want to try to make those losses back and trying to break even on that loss. And what actually ends up happening is you're emotional, you are not thinking straight, you're not waiting for the right opportunity, and you just dive right into another trade, and ultimately, more often than not, you actually end up losing more money. So it's a concept that you need to be aware of, specifically your emotional state at that particular time. If you feel that you're very, very frustrated, you are very angry, or you are in a state that you just want to try to make that loss back. Sometimes the best thing to do is, if you identify yourself in that state, take a step back and realize that, hey, you are in a very emotional state right now, and you should continue trading, or you should stop trading at that time. So in next videos, again, we'll continue on with these series and talk a little bit more about, again, the mental state of trading. So make sure you like us on Facebook and Twitter, subscribe to our videos. I'll see you guys here next time.